But the difference between a budget and a forecast, can you explain that very briefly, very simply? Because that's about as just as complicated for these guys as gross profit, net profit. It's what are the fundamental differences?
Well, they are broadly the same thing. The usual terminology is that you only do a budget once a year, and it's your plan for the year. It's your roadmap, and it's kind of set in stone. It gives you your goals, something to shoot for. Your forecast is an update. So typically, businesses would do a budget at the beginning of the year, and they'd do a reforecast maybe at the 6-month point, halfway through the year, which would just update the budget for known changes, things that have happened in the last 6 months.
Sure. Okay. And have you got an example of how better forecast in recent times with a business you're working with has helped a business either take advantage of opportunity or avoid a crisis?
I think what the forecast or the budget kind of really gives you is it's that control system that we were talking about. If you're missing your forecast every single month, then you look into why. What's going wrong? Which bit of this isn't working? And then you can take some action. But a key one would be to do a cash flow forecast. If you're forecasting what your cash is going to be for the next, let's say, 13 weeks, and you're doing that on a weekly basis, so you start with your opening bank balance, you put in all your expected ins and outs in cash for the week, and at the end of that week, you've got your predicted closing bank balance, and then you roll that forward for 13 weeks. What that lets you see is where the pinch points are. Yeah. At which points do I have sufficient cash, and at which points in the next 13 weeks is it going to get really, really tight? And if you can see that some weeks in advance, you can normally do something about it. But if you get to that pinch point and you're only a week away, normally it's too late. So a cash flow forecast is a huge way of averting a crisis.
And another hugely scary thing for people to have to try and deal with. So is there tools, or if they were to get in bed with you, so to speak, is there a way that can be given to them, as Sarah says, as a toolbox to go, here's how you do the cash flow. This is, you can easily, I don't know, export the data from Xero or from a bank, or is there a way of doing that easily, quickly?
Yeah, what we tend to do is give the company the tools to do the cash flow forecast themselves, because that only the business knows when certain customers are going to pay. Only the business knows when they're going to pay certain suppliers. But we will give them a model, a structured model, and show them how to use it so that they can do their own cash flow forecasting. And I think it's one of the most useful tools any small business can ever have.
And if they've got the tools and they've got the structure and they've been taught, how much time in reality should a small business be needing to spend on a cash flow forecast to manage their expectation?
Once you get used to doing it and it becomes second nature, it's no more than an hour or two a week.